get ready for your essential Xiaomi updates. The tech world never sleeps, and neither do we. From market resilience to financial triumphs and strategic moves, we're bringing you the need-to-know information that shapes the industry. Stick around, because you won't want to miss what's happening right now. First up, we're diving into the electric scooter market and how key players are navigating global shifts. Then, we'll unpack some significant financial news from a major cloud provider, followed by Xiaomi's own impressive revenue performance. And finally, we've got to look at how Xiaomi is investing in its most valuable asset, its people. Let's jump in. Subscribe and hit that notification bell so you never miss an update. Navigating tariff turbulence, the electric scooter market's path forward. The global electric scooter market is demonstrating remarkable resilience, with key players like Xiaomi, Yadea, and NIU strategically positioning themselves to overcome tariff challenges and drive future growth. Projections for the period between 2025 and 2030 indicate a dynamic landscape where innovation, market adaptation, and consumer demand will be crucial determinants of success. The electric scooter industry has experienced an exponential surge in popularity over the past decade, driven by increasing environmental consciousness, rising fuel costs, and a growing demand for convenient urban mobility solutions. This burgeoning market, however, is not without its hurdles. Recent geopolitical shifts and trade policies, particularly the imposition of tariffs, have introduced complexities that manufacturers and distributors must navigate carefully. Companies are actively exploring strategies to mitigate the impact of these tariffs, including diversifying supply chains, optimizing manufacturing locations, and adjusting pricing models. The focus remains on maintaining product affordability and accessibility for a broad consumer base, while also ensuring profitability and sustainable growth. Xiaomi, a titan in consumer electronics and smart devices, has leveraged its extensive ecosystem and brand recognition to establish a significant presence in the electric scooter segment. The company's approach typically involves integrating its scooters with its broader smart home and mobile platforms, offering a seamless user experience. This integration not only enhances product appeal, but also creates opportunities for recurring revenue streams through associated services and app ecosystems. Xiaomi's ability to produce high-quality products at competitive price points has been a cornerstone of its success, and this strategy is expected to continue as it confronts tariff-related cost increases. Yadea, a global leader in electric two-wheeled vehicles, has long been a dominant force in the market. The company's extensive manufacturing capabilities and robust distribution network provide a strong foundation for weathering economic fluctuations. Yadea's strategy often involves a multi-brand approach, catering to different market segments and price sensitivities. By investing in research and development, Yadea aims to introduce innovative features and designs that differentiate its products and appeal to a wider audience. Its commitment to sustainable manufacturing practices also resonates with an increasingly eco-aware consumer base. NIU Technologies, another prominent player, has carved out a niche with its smart electric scooters, emphasizing advanced technology, connectivity, and urban commuting efficiency. NIU scooters are known for their sophisticated app integration, allowing riders to monitor battery status, track their journey, and access diagnostic information remotely. This focus on smart features and connectivity aligns with the preferences of tech-savvy urban dwellers. NIU's ability to adapt its production and sourcing strategies in response to trade policies will be key to its continued expansion, particularly in international markets. The collective efforts of these companies, alongside numerous other emerging players, underscore the robust nature of the electric scooter market. Despite the headwinds presented by tariffs, the underlying demand for efficient, eco-friendly urban transportation remains strong. Companies are expected to focus on enhancing operational efficiencies, exploring new market opportunities in regions less affected by trade disputes, and continuing to innovate in battery technology, motor efficiency, and smart features. The long-term outlook for the electric scooter market, projected to grow significantly from 2025 to 2030, suggests that strategic adaptation and a commitment to delivering value to consumers will enable these companies to overcome current challenges and capitalize on future opportunities. Industry analysts and consumers alike are watching closely to see how these strategies unfold, with many expecting continued innovation and competitive pricing to define the market's trajectory. But that's just one part of the story. Prepare for some compelling financial updates that could impact the broader tech landscape. Kingsoft Cloud rides the AI wave to Q3 revenue surge. Kingsoft Cloud has reported a significant 24.2% year-over-year increase in its third-quarter revenue, surpassing analyst expectations and signaling strong momentum, fueled by the burgeoning artificial intelligence sector and its strategic ties with the Xiaomi ecosystem. This performance highlights the company's successful pivot towards AI-driven services and its ability to capitalize on the ongoing digital transformation. The company announced quarterly revenue of 2.35 billion Chinese yuan, equivalent to approximately $327.9 million, a figure that exceeded the consensus estimate of $313.6 million. This growth represents a 19.3% increase compared to the previous quarter, underscoring a robust upward trend. The primary driver behind this impressive financial performance has been the escalating demand for AI-related infrastructure and products, as businesses globally continue to upgrade their technological capabilities. Kingsoft Cloud's strategic focus on providing full-stack AI solutions, from essential computing resources to advanced applications, has clearly resonated with the market. Breaking down the revenue streams, public cloud services saw a substantial year-over-year increase of 31.7%, reaching 1.63 billion Chinese yuan, $226.9 million. This segment's growth was predominantly propelled by heightened AI demands, with revenue climbing 20.1% quarter-over-quarter. This indicates a strong market adoption of cloud services tailored for AI workloads. Concurrently, enterprise cloud services contributed 723.9 million Chinese yuan, $101 million, marking a 10.1% year-over-year increase and a 17.4% quarter-over-quarter rise. This growth in enterprise services is attributed to expanding demand for software IT services and the accelerated delivery of projects, demonstrating the company's capability in serving diverse client needs. Financially, the company's profitability metrics also show positive movement. The adjusted gross profit increased to 350.6 million Chinese yuan, $48.9 million, up from 327.7 million Chinese yuan in the preceding quarter. While the adjusted gross margin saw a slight decline to 14.9% from 17.1% year-over-year, this was attributed to factors such as the higher cost of servers, the expansion of its AI business, and upfront investments for future customer activities. Despite these margin pressures, the adjusted operating loss improved significantly, narrowing to 166.4 million Chinese yuan, $23.2 million, from a loss of 188.5 million Chinese yuan in the same period last year. Furthermore, the adjusted loss per American Depositary Share, ADS, came in at 15 cents, outperforming the consensus estimate of 21 cents. Kingsoft Cloud's CEO, Tao Zhu, emphasized the pivotal role of AI in the company's growth trajectory. He highlighted that AI gross billing surged by over 120%, reaching 728.7 million Chinese yuan, and now constituting a significant 44.8% of public cloud services revenue. Zhu also pointed to the deepening collaboration within the Xiaomi Kingsoft ecosystem, where revenue generated from this partnership jumped by an impressive 69.5% to 628.9 million Chinese yuan. This synergy with Xiaomi not only broadens Kingsoft Cloud's reach, but also strengthens its market position through shared technological advancements and market access. The company's financial health remains solid, with cash and equivalents totaling 5.46 billion Chinese yuan, $762.8 million, as of June 30, 2025. Year-to-date, Kingsoft Cloud stock has seen a notable gain of 30%, reflecting investor confidence in its strategic direction and market performance. Despite a slight dip in pre-market trading, the overall sentiment surrounding Kingsoft Cloud remains positive, buoyed by its strong quarterly results and its strategic positioning in the high-growth AI sector. Market observers and investors are closely analyzing Kingsoft Cloud's performance, particularly its ability to maintain AI-driven growth while managing operational costs. The company's strong relationship with Xiaomi and its comprehensive AI solutions are seen as key competitive advantages in the rapidly evolving cloud computing landscape. Stay tuned as we bring you more insights into how these tech giants are performing. Next, we're looking at Xiaomi's own record-breaking financial results across its diverse business segments. Xiaomi shatters records with stellar Q2 performance driven by smartphones and EVs. Xiaomi has once again demonstrated its market dominance, posting record-high revenue in the second quarter of 2025. This exceptional financial performance, marked by a 30.5% year-over-year increase, solidifies its position as a leading global technology powerhouse. The company's success is attributed to robust growth across its core segments, particularly smartphones and its rapidly expanding electric vehicle (EV) division, alongside a strong showing in IoT and lifestyle products. For the second quarter, Xiaomi Group's total revenue soared to a record CNY 116 billion, continuing a remarkable streak of more than 30% year-over-year growth for 5 consecutive quarters. This marks the third consecutive quarter where revenues have surpassed the CNY 100 billion threshold, underscoring the company's sustained upward trajectory. The adjusted net profit also saw a significant jump of 75.4% year-over-year, reaching CNY 10.8 billion, reflecting improved operational efficiencies and strong market demand. The smartphone business remains Xiaomi's largest revenue generator, with the company shipping 42.4 million units in Q2. This represents a modest 0.2% year-over-year increase, placing Xiaomi as the third-largest smartphone vendor globally, closely trailing Apple. Regionally, Xiaomi holds the #1 position in Southeast Asia, is second in Europe, the Middle East and Latin America, and third in Africa. In its domestic market, mainland China, it ranks fourth. While the smartphone segment's revenue saw a slight decrease of 2.1% year-over-year to CNY 45.5 billion, corresponding with a marginal dip in average selling price, ASP, to CNY 1,073, $149. The sales of premium Xiaomi phones in China are experiencing significant growth, now accounting for 27.6% of domestic sales, an increase of 5.5 percentage points. Beyond smartphones, Xiaomi's ecosystem products are performing exceptionally well. Tablet shipments reached 3.1 million units globally, a substantial 42.3% year-over-year increase, solidifying its position as the fifth-largest tablet vendor worldwide and third in mainland China. The company also leads globally in smart band shipments and is second in TWS earbuds, further demonstrating its strength in the wearables market. The recent launch of Xiaomi smart glasses also signals its ambition to enter new product categories. A key highlight of Xiaomi's Q2 performance is the remarkable growth in its smart EV, AI, and other new initiatives segment. Quarterly EV deliveries reached 81,302 units, with monthly deliveries exceeding 30,000 units in July. Since its inception 5 quarters ago, total EV deliveries have surpassed 300,000 units. This rapid expansion in the EV market, coupled with growth in other new initiatives, is crucial for Xiaomi's long-term diversification strategy. Although this segment is currently operating at a loss, the operating loss narrowed to CNY 0.3 billion in Q2 from CNY 0.5 billion in Q1, nearing the break-even point. Xiaomi is also substantially increasing its investment in research and development, with R&D spending rising 41.2% year-over-year in Q2. The company anticipates its total R&D expenditure to reach approximately CNY 30 billion this year, focusing on advancements in chip development, EV technology, and AI. This commitment to innovation is vital for maintaining its competitive edge across its diverse product portfolio. Furthermore, Xiaomi is expanding its retail footprint, with over 17,000 stores in China and around 200 international retail stores, including 335 EV stores across 92 cities in mainland China. The market reaction to Xiaomi's stellar Q2 results has been overwhelmingly positive, with analysts praising its consistent growth and strategic expansion into new high-potential markets like electric vehicles. Investors are particularly impressed by the company's ability to manage costs effectively while investing heavily in future growth drivers. Xiaomi's impressive financial results are a testament to its strong market execution, but the company isn't just focused on external growth, it's also investing in its internal engine. Next, we look at how they're boosting employee engagement. Xiaomi bolsters workforce with strategic share and option grants. Xiaomi Corporation has announced significant initiatives to enhance employee engagement and retention by granting substantial share and option awards to its workforce. These strategic moves, involving 44,236,295 award shares and 248,300 XMHK options, are designed to align employee interests with the company's long-term objectives and foster a motivated, high-performing team. The company, known for its extensive range of consumer electronics and smart hardware, has implemented these grants under its 2023 share scheme and the 2024 Xiaomi HK share scheme. Specifically, 2,496 selected participants, including employees and service providers, have received award shares. Additionally, 2 employees have been granted XMHK options. These awards are a clear demonstration of Xiaomi's commitment to recognizing and rewarding the contributions of its personnel, thereby strengthening its human capital. By offering equity-based incentives, Xiaomi aims to cultivate a stronger sense of ownership and commitment among its employees. This approach is widely recognized as an effective strategy for attracting and retaining top talent, particularly in the competitive technology sector. When employees feel valued and have a direct stake in the company's success, their motivation and productivity tend to increase. This can translate into enhanced innovation, improved customer service, and ultimately, a stronger market position for Xiaomi. The grants are strategically aligned with Xiaomi's overall business goals. The company operates with a core focus on innovation and quality, striving to deliver high-quality technology at accessible prices. Its primary markets include smartphones and the Internet of Things, IoT sector, but its ambitions extend to electric vehicles and artificial intelligence. By incentivizing employees through share and option grants, Xiaomi seeks to ensure that its workforce is fully invested in achieving these ambitious targets. This includes driving advancements in new product development, expanding market reach, and optimizing operational efficiencies. Analysts have responded positively to these initiatives, viewing them as a prudent investment in the company's future. A buy rating with a price target of HK$67.50 on Xiaomi stock, HK 1810, reflects continued confidence in the company's management and strategic direction. The technical sentiment signal for the stock is also positive, indicating a buy trend. With a current market capitalization of HK$1,377 and an average trading volume of 142,174,565, Xiaomi remains a significant player in the global market. These employee incentive programs are crucial for a company like Xiaomi, which operates in a fast-paced, innovation-driven industry. The technology sector is characterized by intense competition for skilled professionals. By implementing robust incentive structures, Xiaomi not only rewards its current employees, but also enhances its employer brand, making it more attractive to potential recruits. This proactive approach to talent management is essential for sustaining its growth momentum and achieving its long-term vision. In summary, Xiaomi's decision to grant shares and options is a strategic move aimed at reinforcing its workforce, aligning employee incentives with corporate objectives, and ultimately, driving sustained growth and market leadership. This focus on employee well-being and shared success is a key factor in maintaining its competitive edge. And that wraps up our news for today. But don't go anywhere yet, we've got a quick recap coming right up. That's a wrap on today's updates. We saw Xiaomi and its peers navigating tariff turbulence in the electric scooter market. Kingsoft Cloud soared with a 24% revenue jump, heavily driven by AI and Xiaomi's ecosystem. Xiaomi itself posted record-breaking Q2 revenue, with strong performance in smartphones and EVs. And Xiaomi is investing in its people with share and option grants to boost engagement. Thanks for watching. Don't forget to like, subscribe, and hit that notification bell. Follow us on all social platforms for even more updates, and let us know in the comments what you think of today's news.